Good afternoon. Welcome to London Academy of Trading's weekly market insights. This week, we saw the Reserve Bank of Australia hold rates at 0.75% as they wait until the national bushfire crisis is over before better determining their future monetary policy. In the US, we saw President Trump acquitted following his much publicised impeachment trial. We have seen the dollar strengthen of late, as seen here in a longer-term euro-dollar chart. You can see here there's a considerable downtrend. We've retraced nicely in the form of a rising wedge, which most know to be a bearish pattern. We did break out several days ago. We've got a stop loss just above these resistance levels, as circled here, with a target all the way down to May 17 support level, which is also the MPO from the pattern taken simply from the breakouts. That being said, today we did have data released from both US and Canada. Their employment data suggested that there were more jobs being created in the US, but with a higher unemployment rate. That coupled with a lower unemployment rate out of Canada. The short-term dollar-CAD straddle looks something like this. Simply have to take ourselves into the 5-minute chart for the straddle just before the non-farm payrolls data. And here we can see just the morning range from 8 a.m. up until before the data was released. Very simple setup here was looking to go short through the support level here, targeting the next relevant support. Of course, stop loss above this resistance level. We did initially get those figures out suggesting that there was some dollar weakness and Canadian strength, and hence we went straight down to the support level. You might have experienced a little bit of slippage there, but nevertheless a target was hit. In China, the coronavirus has now claimed over 600 lives and has spread to multiple countries, including 3 known cases here in the UK. Many markets are affected, especially luxury goods, as they heavily rely on Chinese manufacturing, whilst the general rally in stocks seems to have run out of steam as a result also. We also saw considerable weakening in the Singapore dollar, as the Monetary Authority of Singapore stated that there's sufficient room to ease due to the impact of the coronavirus. These fundamentals drive in dollar Sing through our technical setup, which we can see here, once again, slightly longer term, so from the 5-minute chart, dollar Sing all the way up to the daily chart. I'm just going to zoom out ever so slightly, and this is what we have as a result. See the market clearly ranging all the way back here from July 2018. Had a downward move along this lovely daily downtrend, formation of a double bottom pattern, which is known to be bullish reversal. In conjunction, we had an oversold situation on the 14-period RSI here with bullish divergence, suggesting a reversal. Break of the neckline was seen there, but one would probably wait for the next resistance level, as we'd done in this instance. Target, top of the downward move. And you can see here the technical was triggered several days ago, but the catalyst of the fundamentals did get us there to target earlier on today. In addition to this, we've had a Chinese doctor reprimanded last year for warning against SARS-like coronavirus as early as January, actually, of last year. He died today of the coronavirus, triggering online expressions of anger at the government in China and fueling suspicion of censorship in China. Next week, we have pretty minimal fundamental data. We have a New Zealand interest rate decision earlier in the week, and then a couple of speeches from the US Fed's Jerome Powell. Do have a lovely weekend.